Well, that's right. Morgan Stanley put out a very interesting note on the Indian banking sector today, and it actually resulted in a fair bit of optimism revolving around the private banks versus their PSU counterparts. Now, basically, I'm quoting directly from this note. They believe, Morgan Stanley, that the Indian private banks are heading toward a golden era of banking. They believe that the private banks are pegged to perform much better than the PSUs on two main parameters. The first being the deposit franchise and the market share, and the second being the credit cost. So let's first talk about the deposit franchise. We all know that it's extremely important for banks to have a very strong liability base of granular deposits. Given that there's been a lot of problems with certain banks within the system, these deposits have migrated largely to your leaders like Kotak Mahindra Bank, HDFC Bank, ICICI Bank, Axis Bank, whereas their PSU counterparts, barring an SBI, which of course has a very large deposit base, have not managed to scale their deposit bases as quickly. I'm talking about banks like BOB, Union Bank of India, there's New Bank of India, South Indian Bank, there's numerous other PSU franchises who've not been able to grow their deposit franchise as well as their private peers. Now, the second thing is the credit cost you look at, right? So asset quality. If you just look at the moratorium levels that we witnessed at the time of lockdown around all the banks, it was significantly lower at the leading private banks versus the PSUs. SBI had a very competitive figure, but barring SBI, a lot of the other PSU banks had much higher moratorium levels, which ultimately results into significantly higher NPAs. So that's the second aspect to consider. The note then spoke about digital banking and how it's going to bring down the cost of operations for all banks, whether they be PSU or private. So that's a trigger for profitability for the entire banking sector. As more and more banking functions move online to digital platforms, the likes of YONO, and of course each private bank has its own platform, the costs incrementally keep coming down, and that should be fairly good for the earnings of banks. So they retain, once again, their preference of the private banks over the PSUs. They say if you want to look at the PSU universe at all, SBI is one bank that they believe offers significant value and might still be a good pick from a long-term view. But other than that, they didn't really have too much to say in the note regarding some of the other PSUs, despite the fact that a lot of them have recently, in fact in the last 10 days, announced significant fundraisers. So whether you look at a PNB, which is doing a nearly 7,000 crore QIP, or an IDBI Bank, which is doing 1,000 crore QIP, a Union Bank, which is set to meet on December 30th to evaluate a possible QIP, it seems that the PSU banks are gearing up for good growth and a potential war chest in case there are an NPA spike. But for now, according to Morgan Stanley, all the value is going to continue to remain and grow with the larger privates. So keep your eye out on that as we go forward and look at the performance of the private banks versus their PSU counterparts.